On that note, I guess, what do you think is the biggest problem in Bitcoin mining today?
Yeah, I mean, just piggybacking on that, like basically the illiquidity of your, associated with your CapEx, right? Because let's think about this. It's logical to assume that if you have a sunk cost into buying ASICs, right? Now that's an asset. And I like to, it's a dividend paying asset, but that's an asset that creates an asset. The asset that's being created is Bitcoin. Now, if Bitcoin goes up in price or, theoretically just outpaces difficulty, it's logical to assume that that ASIC will also appreciate in value, right? And as you look at history, like look at S19J Pros, for example, they were, approximately $1,500 when they were released a few years ago. Bull market, they ran up to like $10,000, $12,000 sell price, and now they're back down around $2,000, right? After hitting a floor around $1,300, $1,400. So the point being, there's a lot of opportunity to get an appreciation in the value of, effectively what was once your CapEx. Now, if there's no liquid market to sell those rigs into, then that's just a nice paper gain, right? But if there is a liquid market and you time everything perfectly, just to play a little moon math here, you buy rigs at $2,000 when they're worth $7,000. Yes, by the way, you're mining Bitcoin this whole time, so you're lowering your cost basis. But if you have the option then to sell those rigs and get liquidity where a lot of your CapEx is concentrated, that totally, changes the fundamental, optionality in the investment thesis. So I'd say, just to answer the question, very directly, Joe, I think the biggest challenge and oftentimes a hindrance for some bigger, more agile, capital allocators to participate in Bitcoin mining is that in the absence of liquidity on, the rig side, it kind of looks like, like a long, capital lockup period investment. And that can theoretically deter some investors who are not interested in that kind of, cash flowing, investment. So I think point blank liquidity on the rig side, where you have a significant amount of your CapEx concentrated, is the biggest challenge to, approaching Bitcoin mining as a, capital allocation strategy.
Yeah, absolutely. I mean, it's interesting thinking about how you can log into Robinhood or E-Trade or Charles Schwab and, immediately buy like $10 million worth of Coca-Cola. But it's like, if you want to get into the Bitcoin mining industry, yeah, you could buy a public miner, but then you have, management risk, you have their operational risk, you may be buying part of a hosting business, you may be buying a bunch of different things. Whereas it'd be really cool if you could just log into Robinhood or something else and literally buy an ASIC and have it hashing within minutes. So I definitely agree that having rigs like illiquid and not really being able to do much with them in a very fast, quick amount of time is definitely a problem with Bitcoin mining today. Blake, I want to hear what you think. What do you think is the biggest problem in Bitcoin mining today?
Yeah, I would say, number one, Danny stole my answer. I would go for, rig side liquidity. I think being able to capitalize on CapEx gains or the hardware gains is super important. I would say number two for me is probably lead times. And I'm talking about hosted mining here. So what I mean by lead time is the time it takes from the moment you place your order with a hosting provider until that rig is hashing into your wallet. So generally speaking, you're going to have a lead time ranging from maybe 2 weeks to maybe 6 months in certain situations. So it depends on where your rigs are being sourced from. If you're buying new rigs through a hosting provider from, a manufacturer like Bitmain based out of Asia, then you have to wait for them to put your rigs onto a pallet, ship them to the United States. Then from that port that they enter the country in, they have to be sent to, the mine, the data center. Then they have to be placed on the rack, energized. They might have to run some diagnostics. They might have to clean the machines, whatever. It takes a lot of time from the moment you purchase until the rig is actually hashing to your wallet. The issue is Bitcoin obviously moves 24/7, and as Danny just explained, the value of the hardware is very closely correlated to the spot price of Bitcoin. So let's say, maybe it takes 4 months for your rig to actually begin hashing in your wallet from the moment that you paid the hosting provider. If Bitcoin's down, let's say Bitcoin, fell 20% in those 4 months, then you're basically stuck on this unrealized loss on the hardware side, and you also weren't earning any Bitcoin during the period. So you're already sitting at a loss to begin with, more so than you already would just from the initial capital outlay. And on the flip side, if Bitcoin started ripping, but you weren't hashing during that period, yes, you got to, you get to capitalize on the CapEx gain, on the hardware gain, the value of your ASIC, but you didn't earn any Bitcoin during that period. So you didn't get to, have the value of the spot Bitcoin appreciating as well. So I would say, lead times are significant and probably the number 2 issue for me behind illiquidity.
Yeah, I think those are some really good points. I think for me, the third largest issue with Bitcoin mining is really just like a lack of transparency, right? Like we've seen so many people, retail, private, and even like public miners kind of get burned just not knowing like, hey, are the rigs that I'm buying legit? Are they going to be hashing in a certain amount of time? Are they working at full hash rate? Are the rewards going to get paid out to your pool, and then is the pool going to pay out to your actual Bitcoin wallet? So I think there's been like an extreme lack of transparency in the Bitcoin mining space, and I think there are players in the market that are working to improve this. And so I think the audience may know that we've been kind of hinting at something for this podcast. Danny, do you want to know, or do you want to let the audience know, like, what is the announcement that we have today?
Sure. Yeah, absolutely. So, and Joe, you nailed it. We've been hinting at this for a little time, and we've been doing a lot behind the scenes, but we're really psyched to announce that we are going live. We are live, but we're going live in a public capacity with Blockware's Bitcoin mining rig marketplace, which is a Bitcoin native circular economy themed lightning transaction enabled marketplace where it provides the option but not obligation for folks at this point that are hashing in Blockware's facilities with the option but not obligation to list their miners for sale and also participate in buy side. Right, so we'll unpack this a little bit, probably much further as we go forward. But point blank, the announcement is that we're solving the illiquidity challenge with Bitcoin mining and providing significant optionality to the market to be able to trade Bitcoin mining rigs, which again have a market efficiency dictated spot value at any given time, which we think is quite frankly just a game changer.
Yeah, absolutely. So I guess those 3 problems that we were mentioning, the illiquidity, the lead times, and the lack of transparency, effectively get solved by the Blockware marketplace.